So guys, today we are going to discuss about overhead variance, right? So first of all, I'm going to quickly explain what is the definition of overheads. So guys, when we manufacture any product, like if you look into the production process, and when you manufacture any product, so you always need these three things to manufacture the product. You need a cost, you need a direct material, okay, you need what the cost of direct labor, this cost you will incur. And then third thing we say that is called what? The overheads. So this is what, because our topic is overhead. So if let's assume you are manufacturing chairs, any tangible input, like for example, this plastic, foam, metal. So this is called tangible input, right? So any tangible input to the production process, which can be traced, which can be looked, okay, easily into the product. So that is called direct material. Okay, so apart from direct material, we also use certain types of material which is not direct, which is what? Indirect. For example, maybe you're using staples, glue. Okay, these are also tangible input, but these are not easy to trace into the cost object. You cannot look easily, right? So maybe you are consuming labor also. Maybe you are consuming, for example, electricity, you are paying rent. So all these things will become your overhead cost. I'm talking about indirect labor. So here we go. Let me just quickly tell you. So what is the overheads here? How overheads are defined? And then we will move forward. So first here we have definition of production overheads. So what is production overheads? Production overhead consists of all cost of manufacturing that are not direct material or direct labor. Any cost which you will incur other than direct material and direct labor. So those costs are called what? Overhead cost. Understood? So mostly in overhead cost, we have three components. Three components we have in overheads. So one component is called what? Indirect material. This is not direct material. Second component of overhead is called what? Indirect labor. They will not ask you to define what is indirect labor here or indirect material. So you should know like these things will be the part of overhead. Then third thing, which is the part of overhead is the word that is called factory operating cost. So let's quickly understand. So what does mean by here? I'm not going into detail what is direct material, indirect material. Okay, I'm just explaining what is the topic today. So what is indirect material? How it is defined? Indirect material, these are tangible input to the production process. Tangible, it means that these things having physical existence. Like if you are manufacturing chairs, understood, maybe you are using staples, nails, maybe you are also using glue. So these are tangible inputs to the production process. But these products, these tangible inputs cannot be practicably be traced to the product. So you cannot easily trace into the cost object. For example, the chair on which you are sitting now. So maybe you cannot look how much glue they have used, right or wrong, in assembling this chair. So that is why it cannot be traced easily. So that is called what? Your indirect material. Example here, for example, welding compound, okay, used to put together a piece of heavy equipment. Obviously, when you try to assemble two equipment, sometimes we use welding, right? The welding compound. So it is called what? Your indirect material. Okay, then again, for example, when you stitch shirts, thread would be indirect material. Use of glue in manufacturing of furniture related item, this could be what? Your indirect material. Then we have here what? Indirect labor. It is also part of overheads. So what is indirect labor? It is the cost of human labor. It is what? It is labor cost, I'm talking about labor cost. So labor cost is what? Obviously, when we manufacture some product, sometimes we need labor. We need people who can work on the product. Okay, so some people, they are directly working on the product. So we say that is direct labor. But there are some kind of labor which is not directly working on the product. For example, janitorial staff, right? Maybe cleaners, sweepers. You may have a production manager. He's not manufacturing product by his hand, right or wrong? So these people are called what? Indirect labor. So what it is? So indirect labor is the cost of human labor connected with the production process, but that cannot be traced to the product again. Understood? So then, for example, wages of assembly line supervisors or janitorial staff. But those people who are working directly maybe, okay, on the product, so that is called what? Direct labor. But those people like janitorial staff, supervisors, so they don't work on the product. So supervisor will just supervise how the people are working. Right? Janitorial staff, they are helping the people. So these people are called what? Indirect labor. So far what I told you, under overheads, we have three categories. We have indirect material, we have indirect labor. These words should be in your mind. Third thing is what? Which is the part of overhead that is called factory operating cost. Factory operating cost includes what? Such as what? Utilities. Utilities means like electricity expense, gas, etc. Real estate taxes. Okay, maybe you are paying some tax of your factory. Okay, insurance. Okay, depreciation on factory equipment, even depreciation, factory rent. All these are called what? Factory operating cost. So now, if anyone will ask you how many components are there for overhead, you will say three. So for just you need to remember these three words. It includes indirect material, indirect labor, and factory operating cost. When you combine these three things, it is called what? Overheads. Now there are two further types of overheads. Some overheads are called what? Variable overheads. Variable, you know the word, like those overheads which will change with the production. For example, if you increase the production, these overhead costs will also increase. If you will cut the production, this overhead cost will also decrease. That is called variable. So sometimes some overheads which are fixed, like rent. Even you are producing more items or less item, you have to pay same amount of rent. Maybe insurance of factory, plant and machinery, whatever your production level is, so you have to pay fixed amount of insurance. So there are some overheads which are what? Variable, and some overheads which are fixed. So variable overheads include what? Just for example, it includes what? Indirect material. It is variable because material like indirect material like glue. So if you will manufacture more products, you will use more glue. If you will manufacture less product, you will use less glue. Same here like welding compound. If you are welding more items, okay, more compound is required. If you are welding less items, so less compound is required. So indirect material is your what? Which overhead? Variable overhead. Same here, indirect labor. Indirect labor is also your variable overheads. Right or wrong? Obviously, if you will manufacture more products, maybe you need more indirect labor. If you will manufacture less product, maybe you need less indirect labor. Then maybe utilities like bills. Obviously, if you will operate more machines, more, you have to pay more electricity bill. If you will operate less machines, you have to pay less electricity bill. So these are variable. And then depreciation expense. But depreciation expense, okay, under any method, this is the important point. Normally, please let me tell you here, in accounting, normally we use straight line method, reducing balance method, right? Or on these kind of method. Those methods, if you're getting any depreciation of factory, plant and machinery based on straight line or reducing balance method, so those depreciation amounts are called fixed amounts because it has no relation with the production. You are producing more or less, so you are calculating same depreciation in the straight line method, right or wrong? So even if you are producing more or less production, so you are calculating depreciation by using reducing balance method, which has no relation with the output. So normal depreciation is treated as kind of fixed overhead. But if you are calculating depreciation based on output, okay, for example, taxi car. So if you are depreciating the car, for example, based on mileage, so if you will drive more mileage, more depreciation will come. If you will drive less mileage, less depreciation will arise, right or wrong? So then it will become variable. It means depreciation expense can be variable only if it ties the depreciation to the level of output. If it has no connection with the output, like under straight line method or reducing balance method, it has no connection with the output, then it will be treated as fixed overhead. Then you have other overhead cost that is called what? fixed overhead. Like as I gave you example earlier, like real estate taxes could be fixed, insurance could be fixed, rent could be fixed, depreciation expense can also be fixed under any method not related to the level of output as I have given the example to you, like depreciation under straight line method, depreciation under reducing balance method, then it is treated as fixed overhead. The reason it has no relation with the output. So far, don't worry because I will tell you a lot of stories. So you have to remember just keywords. Keywords are what? From overheads. In overheads, we have a three costs: indirect material, indirect labor, and factory operating cost. And some of these are variable and some of these are fixed. Understood? Clear? Now here guys, please remember here. This is just overhead cost. We will also take it to the product. Where we will take? To the product. And please remember, this is just a formula I'm showing you. I'm going to deal with only first variable overhead. Fixed overhead we will deal later. And if you remember, variable overhead includes what? Look at here. It may include what? Indirect material. It may include what? Indirect labor. It may include cost of utilities. It may include depreciation expense that ties the depreciation to the level of output as example. So these are called what? Your variable overhead. Okay. Now it's very simple question. When you manufacture any product, so you need to include this variable overhead cost into the cost of product. And that time we always calculate a rate. What do we calculate? The rate. This rate is always estimated because normally these rates are calculated at the start of the year. Okay. So we calculate the rate for the variable overheads. Even we will calculate the rate for fixed overheads. But that I will explain later. We always calculate the rate of variable overhead. Okay. And that rate we will use later to allocate the cost of variable overheads to the product. Understood? And how you calculate that rate? This rate usually we will calculate at the start of the year. So what is the rate? And that is called what? That is called standard variable overhead rate. Standard variable overhead rate. This thing what I'm explaining so far, I'll take you to the variance, don't worry. It is just basic I'm explaining on the back end. So we need always a rate. What we need? Rate, which we will use to allocate the cost of variable overhead to the product. And how this rate is calculated, just remember the formula because you need to know this formula. So we will always take what? We will take estimated. Did I say any actual? I'm saying estimate because this rate we calculate at the start of year. So it is based on estimate. We always take estimated total amount of variable overheads. Okay. Don't worry, it will be given in the question. If it is not given, so he will tell you the way how to calculate it. So we have total estimated variable overhead amount divided by what? Estimated total activity level. Activity level means say what is the base which you have to use to allocate the overhead to the product. And normally, most commonly, there are three bases. Activity level, there are three types of activity level which can be applied to get this rate, and then we will use the same activity level to allocate the cost of the variable overhead to the product. So which activity level most commonly we use? We use machine hours. We can use machine hours. Machine hours we can use only if our work is machine intensive. Work is machine intensive. What does mean machine intensive? It means if most of the products are produced through the machines. So that is called machine intensive work. So if our work is machine intensive, so suitable base that we should use, that is machine hours. Second, it could be labor hours. It could be labor hours we should use if our work is labor intensive. Labor intensive means that most of the work is done through labor. So then that is the base, appropriate base. And third base could be what? Any other base, like for example, output. Maybe we can calculate this rate based on output, production. Understood? There are three common bases you can use. Don't worry. In your exam question, so he will tell you which base you have to use. He will tell you, do you have to use what? Machine hours or labor hours or what? Output. Understood? Can I ask question here? Okay, look, for example, my overheads are $100,000 estimated overheads. And my basis, for example, labor hours. And my estimated total labor hours for that period is, for example, 50,000 labor hours. So what I will get? I will get rate per labor hour. What I will get? Rate per labor hour. So it is estimated rate. How much is the rate? $2 per labor hour. This rate is for what? Variable overheads. Understood? If, for example, I'm dividing here machine hours, 50,000, let's do machine hours. So then this rate will be $2 per machine hour. If I'm dividing here output, let's assume I have 50,000 units. Then this rate will be what? $2 per unit. Understood? This is the rate which we will use to allocate the overheads to the product. Understood? Clear? So how many bases most commonly we use? 3 bases. Machine hours, labor hours, or output. In your exam, he will say the sentence like overheads are absorbed or allocated based on labor hours. It means you have to use labor hours now. He would say in exam, overheads are absorbed or allocated based on machine hours. It means you have to use machine hours. Or he will say overheads are absorbed based on output. It means you have to use units as a denominator in the formula. So this formula is for what? Don't worry, guys. Don't take it too much information. No, it's just a one formula. And this formula will give you rate of variable overhead per labor hour or per machine hour or per unit. And this rate is called which rate? Standard. Why? Because it is based on what? Estimated value. Understood? Actual rate could be different. Don't worry. Understood? Now it means if I will summarize the whole story, can I say in summarized way, if you will agree with me, I would say there are overall 2 bases. One base is called hours base. It could be machine hours or labor hours. Like overheads could be absorbed on hours basis. It could be machine hour, labor hour. And second base, I would say it is based on what? Output. Based on what? Output. So in your exam, why I'm saying? In your exam, you are going to face 2 scenario. Number 1 scenario, either he would say overheads are absorbed based on hours. Hours means it could be labor hours, it could be machine hours. Then how you will calculate the variances, I'll tell you. Second base could be what? Second case could be, he can tell you that overheads are absorbed based on output. So we can make 2 cases in shortcut, right? What is the first case? If overheads are allocated based on hours, machine or labor. Second case is what? If overheads are allocated based on output. I'm telling you, if you will remember this information, whatever I'm going to tell you now, so you can tackle all kind of questions relevant to variable overheads. Understood? So let me avoid unnecessary discussions, because let me take you to the main point, because we are required to calculate variance here. Okay, so I can explain so many things, but that will not help you to solve questions. To solve questions, let's be specific to the information. So here we go. So there are, please remember here, for overhead variance, which overheads I'm talking about? Variable overheads. And we are talking about which budget variance? Flexible budget. I told you we have to study flexible budget variance in first lecture. Okay, and there are 2 variances are there. I'll tell you. How many variances are there? 2 variances for variable overhead. It could be which variance? First variance. It could be price. Price variance is also called what? Rate variance. And this is also called which variance? Spending. You can use any word. Price, rate, or spending. It means this variance you have to calculate. And second variance is what is called? Quantity variance. Or what? Usage variance. Or what? Efficiency variance. There are 2 variants. Just remember this information. I'm avoiding unnecessary discussion. So how many variances are there? 2 for the variable overhead. What is the name of first variance? Price, rate, or spending. Second is what? Quantity, usage, or efficiency. Understood? And first case I'm going to explain, because let's understand case by case. First case is what? Case is what? If variable overheads are applied, you can use the word applied, absorbed, allocated, any word. If variable overheads are applied based on what? Based on, I'm using word what? Hours. It could be labor hours, it could be machine hours. If it is machine hours, where I will use word labor hours, there you will use machine hours. That's it. Understood? Okay, how it is calculated? Please remember. So there are three lines we will produce. I told you the previous lectures also, because I'm telling you shortcut way. Two words we have, A and S, two alphabets. And we have a three combination of these two alphabets. And these three combinations will become formula. Let's say we have two alphabets, A and S. So first combination will be A times A. Second combination will be what? A times S. And third combination will be S times S. Don't break up this sequence. A times A times S times S. Understood? Okay. Actually, A stand for actual. And S stand for what? Standard. Standard. Budgeted, you can say. So here we go. We have two columns now. This is the first column, I would say. This is the second column. With the first column, I'll attach the word hours. What word I'll attach? Hours. For example, it could be actual. This is A hours means actual hours. Here I'll also attach the word hours. It is again actual hours. Again, I'll attach the word here what? Standard hours. So these are total actually. Total actual hours, total actual hours, total standard hours. And here I'll attach the word rate. For example, this is the actual rate of variable overhead. This is going to be standard rate of variable overhead. This is going to be standard rate for variable overhead. Huh?
I think the rate will be on the other side.
Which side? No.
No.
Okay. Understood? Actual hours into actual rate. Actual hours into standard rate. Standard hours into standard rate. Okay. Now please remember here, I'm just showing you. I'll tell you how to find these components. Don't worry. So we have three lines. Okay, if I multiply actual hours with the actual rate, so I'll get one value. Right or wrong? And you know what it is? Actually, this value is your actual amount of what? Variable overheads. Sometimes straight away, please, I need concentration. It is not hard. I told you three lines, A times A times S, S times S. What is A times A? Actual hours, actual rate. What is A times S? Actual hours, standard rate. What is S times S? Standard hours, standard rate. If I'll multiply actual hours with the actual rate, so whatever answer I will get, that is called what? Actual overhead cost, variable overhead cost, because I'm talking about that. And sometime in your exam question, he will straight away tell you that actual variable overhead cost is $120,000. So you don't need to multiply actual hours with the actual rate, because you already have actual overhead cost straight away. Then second line is what? Actual hours into standard rate, you will get another answer. Then third line, I'll tell you how to find out. Third line, standard hour into standard rate, you will get another answer. Now look, if I take the difference of these first two lines, first two answers. First two answer means this line and this line, right? Tell me, is there any difference of hours? Hours are same. Is there any difference of rate? So it means it should be a rate variance then. It should be which variance? Which is called spending also, price also variance. Right or wrong? If I take the difference of this second line and third line, look at it. Is there any difference in hours? Yes, there is difference in hours, actual hours and standard hours. Is there any difference in rate? It means if there is no difference in rate, it is not a rate variance. Then it is which variance? It is efficiency variance, hours variance, quantity variance, usage variance, quantity of hours, usage of hours. Understood? Clear? I'm just showing, I will show you how to find these components. Don't worry. So first two lines difference will give you which variance? Rate. And second and third line variance will give you efficiency variance. If I want total variance now, what? Total. Total should include what? Rate variance and efficiency variance. It will give you what? Total variable overhead variance, right? Right or wrong? You know, this is the first way to get total variance. What? Calculate first which variance? Then calculate which variance? Efficiency, and then net off. This is going to give you total variance. So there is one more shortcut to get total variance. Shortcut. What is shortcut? Take the difference of first line and last line directly. Look, check. There is a difference in hours or not? Actual hours and standard hours. There is a difference in rate or not? Actual rate and standard rates. It means if I take the difference of first line and third line, this will also give you total variance. This will give you what? Total variance. Now let me quickly also tell you when it will be favorable, when it will be unfavorable, and then I'll tell you how to find these components and then practical part. Ready? So here we go. Guys, what was the first line? Actual hours into actual rate. What was the second line? Actual hours into standard rate. So this will give you one answer. This will give you another answer. The difference is going to be variance. And it is which variance? First two line I have written. Which variance? Price or rate variance. If first line is higher, second is lower, variance will be what? Unfavorable. Why? Because actual rate is more, which is not good. It's your cost, na? If actual rate is more, it is not good for you because it is your cost. Actual cost, if it is more, it is unfavorable. But if first line answer is lower, second line answer is higher, this variance is going to be favorable. Why lower? Because actual rate is less. So it is going to be favorable. Then can you tell me what was the second line? Second line was the same. Actual hours into standard rate. And what was the third line? Standard hours into standard rate. So this will give you one value. This will give you another value. And the difference of these two values, which variance? Efficiency variance. Again, if first line is higher, second is lower, the variance will be what? Unfavorable. Why? Because actual hours, because it's a difference of hours. Because actual hours you took more than standard. Because actual hours you took more than, for example, it is same story. If I will tell you that you have to complete one chapter in 3 hours, this was standard. One chapter, 3 hours. You completed one chapter in 5 hours. So actually, how many hours you took? 5. It is good or bad? Bad. That is why whenever first line is high, second is lower, it is unfavorable. Because for the same level of output, you took more hours. And if first line is lower, second is higher, variance is going to be favorable. Understood? First line lower means your actual hours less. It means you completed your task quickly in less time. Understood? So I also got it favorable and unfavorable. So I'm taking you to this side. Don't forget. Our case is what? Overheads are applied based on hours. It could be labor hours and it could be machine hours. So 3 lines I told you what? Actual hours into actual rate, actual hours into standard rate. This is, and third, standard hours into standard rate for variable overhead. Now let's understand how you will find these components. What was shortcut? A times A times S times S. Now let's understand how you can find actual hours. First I'm going to explain. It could be machine hours, it could be labor hours. Okay, it could be anything, any hours, labor or machine. So that's why I'm not using words specific labor hours. So here, if I want to calculate actual hours, it could be machine or labor. How I will calculate? I will take always first what? Actual output. Output means actual production. And I will multiply with what? Actual hours per unit. It could be labor hours, it could be machine hours. If I'm calculating machine hours, I'll take actual machine hours per unit. If it is labor hours, I'll take actual labor hours per unit. Understood? I hope so you understand this word. What does mean by actual labor hours per unit? Like for each unit of output, how many hours you took. So that you will multiply with what? With the actual output. Understanding? What I said, for example, actually I produce 1000 units. How many units? This is actual output. And each unit took 2 hours. So it means 1000 times 2 hours. So it means I took how many hours? 2000 hours. So same here, actual labor hours, second line is also actual labor hours. Same formula we will use. What is the formula? Again, actual output into Actual hours per unit, same. Only the third thing is going to be different here, which is going to be standard labor hours. This is total standard labor hours. Total standard labor hours. What it is, how you will find them. You need always what? Which output? Actual output. Here we also use which output? Here we also use which output? Here I will also use which output? Actual output. Only difference is what? This is going to be changed here. I take actual output multiply by standard means here budgeted. Budgeted hours per unit. Look here I use which hours? Here I use which hours? But here I'm using standard means budgeted hours per unit. Like what was budget? For example, our budget was to complete one chair, we should take 1.5 hours. This was budget. But actually I took 2 hours. See, this is different now. Understood? So here I'll take standard hours per unit means budgeted hours per unit. Understood? Clear? Now here, I hope so this our side is clear, right? Our side. We have actual hours and total standard hours. Now here, this side. This side is what? We have to calculate what? Actual rate per hour. Machine hour, labor hour, whatever. Second line what was standard rate per hour. Third line is also standard rate per hour. It means there are two types of rate I'm using in these 3 lines. One is actual and second is standard rate. How you can find actual rate? Actual rate of overheads. How? You should take numerator actual, total, variable overheads. Which overheads? Variable overheads in dollar. Actual over. Because I want actual rate. It's all logic. I want actual rate. I will take actual overheads divided by what? Actual total hours. It could be machine hours. It could be labor hours. Can I ask question? Can I multiply labor rate in labor hours? Like can I multiply, for example, let's see this way. If variable overhead is given in labor hours, variable overhead rate is given in labor hour. For example, $5 per labor hour. I should not multiply with the machine hours. I should multiply with the labor hours. If rate is given in machine hours, per machine hour, for example, then I have to multiply with the machine hour. Right or wrong? It's all logic now. So then what? How you will find actual rate if it is not given? Let's see. If it is not given, how? What is the formula? Actual amount of which overhead? Variable overhead. Divided by what? Total actual hours. Now, if standard rate is not given, what? So there are 2 ways to get standard rate. How many ways? Standard rate means here budgeted rate, budgeted rate. So I told you already this formula previously, but I'm going to tell you here if standard rate is not given. Here it is explained. If standard rate is not given here, standard rate I'm calculating. Standard means a budgeted rate. So what I will take? I first numerator of the formula will be what? This will be the numerator. What it is written? Total budgeted variable overhead. Because I want budgeted rate. So I'll take numerator what? Budgeted overheads, total variable overheads. And divided by which hours? Budgeted hours. Divided by budgeted hours. Budgeted hours, how you will calculate? Tell me. Total budgeted hours. It could be machine or labor hours. How you will find? So you will take budgeted output. Budgeted. See, understand here. Budgeted output multiplied by standard hours. Standard means budgeted hours per unit. This will give you which hours? Budgeted hours. Previously, I told you how to find actual hours. I said what? I'll use what? Actual output into, no, actual hours I want. Into actual hours per unit. This will give you a total actual hours, right? If I want total standard hours, total. So then how I will calculate actual output into standard hours per unit. This will give you what? Total standard hours. Total standard hours. So here I'm using which? In the denominator, what is it? What is the denominator? I'll take what is the numerator? I'll take what? Budgeted. Total variable overhead cost divided by what? Budgeted hours. And budgeted hours, if it is not given, how you will find? By applying this formula. What is the formula? Budgeted output into standard hours per unit. Understood? Clear? Okay. This is the one way. This way is for what? Don't be lost. This way is for what? Standard rate. How to find standard rate? Clear? Second way is also there to calculate standard rate. There is another way. Standard rate is, you can calculate this way. This is the second way. In exam, he will tell you efficiency variance in dollar. Efficiency variance in dollar. Variance answer he will tell you, like efficiency variance is 5,000 favorable or 5,000 unfavorable. I'll take that variance. And I will divide with what? Divide with the difference of what? Actual hours and, I told you how to find actual hours. Actual hours, I told you here, this is how you will find actual hours. And I told you how to find what? Standard hours. This is the formula for standard hours. If I take the difference of actual hours and standard hours, this will be the variance in hours, right? Variance in hours. And what is the numerator? That is variance in dollar. So efficiency variance in dollar divided by actual hours minus what? Standard hours. So this is what I'm saying. You will take usage variance in dollar divided by actual hours minus standard hours, total actual hours and total standard hours. So if you use this formula, this will also give you what? Standard rate. This formula is not new. I explained in the last two sessions also. It's the same formula. Clear? This formula is for what? How to calculate? Standard rate. And what was the formula? How to find actual rate? Actual rate. You will take actual overheads divided by actual hours. If you want standard rate, you will take budgeted overheads divided by budgeted hours. Another way to get the standard rate is what? Efficiency variance in dollar divided by difference of actual hours and standard hours. This will give you standard rate. Okay? Clear? This was variance. Which variance? Variable overhead variance. And what was the case? At the end, I can summarize. It will take only 2 minutes and whole summary will be with you. So there are 3 lines. Which 3 lines? Which 3 lines? Actual hours into actual rate. Then second line is what? Actual hours into standard rate. Third line is what? Standard hours into standard rate. First 2 line variance is what? First 2 line variance, if I take the difference of first 2 line, it is called variable overhead spending variance or price variance or rate variance. The last 2 lines, second and third line, it is called what? Efficiency variance. If I want total, tell me if I want total, what I can do? Total variance, what I can do? I can net off these 2 variance. Or I can take the difference of first line and the third line. This will give you what? Total variance. Understood? Clear? Now, let's do the questions first, huh? And then I'll tell you theoretical points, because if I'll start theoretical points now in between, so you will be lost. So this is the first question. First case we studied. Which case it was? If variable overheads are absorbed based on hours. So there is a second case. Which case? Second. Case number 2. If variable overheads are applied based on what? Units of output. Can I ask question? Because why I'm asking questions, I want just to understand, do you remember that information or not? If overheads are applied based on hours, so how many lines were there total? Three. But see, if overheads are applied based on output, based on only there will be two lines then, not three. Third line you cannot produce then. Understood? If those two lines I'll explain, don't worry. I'm saying one more time. If variable overheads are absorbed based on hours, how many lines are there? Three lines. Actual hours, actual rate, actual hours, standard rate, standard hours, standard rate. If now case number 2, if variable overheads are applied based on units of output, so there are two lines only. What is the first line? Because here we'll take output as activity level. So we'll take here actual units of output. Multiply by what? Actual rate per unit. This rate is for variable overhead. Second line will be what? Actual units of output and multiply which will be what? Standard rate per unit. So look at here, this output is the same. Actual output. Only rates are different here. How to find actual rate per unit? How you can calculate? Just tell me actual rate per unit. Very simple. You will take actual rate I want. I will take total actual variable overhead dollars in dollars divided by what? Total actual output. If I'll follow this formula, this will give you what? Actual rate per unit. Can you tell me how you can find standard rate now? Standard means budgeted rates. I'll change these words. So this is not going to be actual. This is going to be total budgeted variable overhead. This is also not going to be actual. This is going to be budgeted total budgeted output. So this will give you now which rate? Standard rate. For actual rate, I'll use numerator and denominator both actual. For standard rate, I'll use numerator and denominator both budgeted. Understood? Clear? Okay, third line you cannot produce here. Only two lines. What is the first line? Actual unit into actual rate. What is the second line? Actual units into standard rate. Third line you cannot produce. Standard unit into standard rate. No, you cannot do this. Understood? Because flexible budget variance we are studying. So here we go, guys. Please remember here. So if you look at here, is there any difference in output here? Is there any difference in output? No. Okay. So look at here. Is there any difference in rate? Yes, I would say this is then which rate? This is which rate then? This is the rate variance, I would say. The first line gives you which? Actual amount. First line will say how actual amount, because you are taking actual units and actual rates. So it is actual amount of overheads. Second line is what? Actual units of output. Output is actual, but you're using which rate? Standard rate. So this is called what? Flexible amount. This is flexible amount. Okay, and this will give you directly which variance? Total variable overhead variance. Please remember, and I would say it is a rate variance because it's a difference of rate. Now look at what is a note. If variable overheads are applied on basis of output, so what it is? No efficiency variance will arise. You know efficiency variance, what it is? It is the efficiency of labor or machine. It is the efficiency of labors or machines. Labor could be efficient or inefficient. Machines could be efficient or inefficient. Understood? If you are using output here, so efficiency variance will not arise. Efficiency variance will arise only if overheads are applied based on hours. Labor hours or machine hours. Understood? Okay, now here, let me do first quick question. Because to solve the question, you need to memorize only formulas for the numeric questions. Then I'll add some theoretical information. That information will help you only to solve theoretical questions. Clear? So here we go. We have question number 1, or let me do it here first, the difficult exam standard question. Ready? So here I would request you, would you please go through this question, guys? Always read the requirement first. What is the question? What is the variable overhead? Spending variance. Spending variance means what? Rate variance. Rate variance means to say price variance. So please go through this question. We have a question here. Question is what we have here, which units? Budgeted units. For the year end 31st December, how much? 200,000 units. This is budgeted units. Then each unit requires what? 2 standard hours of labor for completion. Actually, I can say it is standard labor hours per unit, right? Can I say it is what? Standard labor hours per unit. How many hours? 2 hours. Right? And budgeted output is how much? 200,000. Then what? Total overhead was how much? 900. Total mean to say it is variable and fixed both. Question is tricky. Then here he gave you information about what? He gave you information about fixed overhead. Rate was estimated. Again, this is standard rate of fixed overhead. How much? $3 per unit. This is which rate? Actual or budgeted? Budgeted rate, but for fixed overhead. $3 per unit, not hour, per unit. This is fixed overhead per unit. Overheads are assigned to the product on the basis of variable, because variable overhead we are studying, so they are saying it is based on what? Labor hours. Okay. Then this the actual data for the year is as follows. What is the actual data? Actual production in units is how much? 198,000 units, because in units. Then actual direct labor hours, how much? For 40,000 hours. Then actual variable overhead is how much? $352,000. Then actual fixed overhead is how much? Actual fixed overhead 575,000. Let's do it now. So what is the variance you have to calculate? Don't worry, it's easy. What's the variance? Spending variance. Would you write first spending variance formula? Spending variance for variable overhead. It's for variable overhead. Huh? So what is the formula? You have to write spending variance means the first 2 lines. First 2 lines is what? Actual labor hours into actual rate per hour. Second line is what? Actual labor hours into what? Standard rate per hour. I'm writing 2 lines only, right? First 2 lines. Is there anything new? No. If, okay, now tell me, if I will multiply actual labor hours with the actual rate per hour, so what I will get? It will be actual variable overhead, and it is given in the question. You don't need to calculate. Look in the question where it is given actual variable overhead. Actual variable overhead cost is given here. Is it given or not? Yes. 352,000. So it means first line answer is already given. I don't need to work. Understood? Second line is what? What is the second line? Actual labor hours. Into which rate? Standard rate. Okay, look in the question. Is there any actual labor hours are given? Look in the question. It's given actual labor hours here. 440,000. So I will write it here. Check in the question. Is there any standard rate is given? Standard rate. Standard rate is not given, but standard hours are given. Standard rate is missing. Standard rate I have to calculate. This is standard rate for what? For variable overhead I want. Understood? How I can work now? Look, I'm just writing it here. You are.
So 2 standard hours of labor is given, right?
This is hours, not rate. I want standard rate. Rate always in dollar. So now I have to work with it. So I am provided with the total overhead cost. Total overhead. Total overhead means it includes both variable and fixed, which is how much? 900,000. If from there, if I will deduct fixed overhead, and this is the budgeted, total budgeted overheads, 900. If I will deduct fixed overhead also budgeted, if I will deduct from here, can I get variable overheads? Can I get variable overhead? Because from if total overheads, if I will remove the fixed overhead, I'll get what? The variable overhead, which is also I need budgeted because I want standard rate. For standard rate, I need budgeted overheads and budgeted hours. Right? Tell me what is total overheads? Given in the question 900. Tell me how you will find the fixed overhead now. Read the data where it is given. Fixed overhead is given here. Fixed overhead rate is estimated how much? $3. Is the estimated rate. $3. And I want estimated overheads. $3 is given per unit. How many budgeted units are there? If I will multiply 200,000, which are budgeted units, and with $3, which is budgeted rate, I will get budgeted fixed overhead or not?
Yes.
So how much it is going to be? 600,000. So I'll deduct here what? 600,000. Right? It means how much variable overhead I got now? 300,000. This is which overhead? Variable, not budgeted. Now recall the formula for standard rate. What was standard rate formula? Standard rate formula was what? First formula. It was what? Total budgeted variable overhead, which I already got how much? 300,000 divided by total budgeted hours. Budgeted hours, how you will calculate? Budgeted hours, how you will calculate? Tell me budgeted hours I want. Look in the question. Look in the question, which information is given. I am given. I have provided here. He told in the question, each unit requires 2 standard labor hours. This is budgeted hours, but this for 1 unit. And how many units are there? 200,000 budgeted units are there. If I take budgeted units into budgeted time, I will get what? Budgeted hours. Right or wrong? So how many budgeted units are there? 200,000 units. And budgeted hours how many? 2 hours per unit. If I multiply, it is going to be 400,000 hours. Agreed? Now what was the overhead amount? 300,000. And what are total budgeted hours? How much? 400. So what will be the rate? Rate will be $0.75 per labor hour. This is standard rate. So this standard rate, I'll bring it here in the second line. This is how I calculate it. 0.75. Now if I will multiply actual labor hours with the standard rate, I'll get second line also, right? First line was given in the question. So now tell me first line is higher or lower? Higher. Second is lower. Variance is going to be unfavorable, which is going to be 22,000. Clear? Understood? As I told you, nothing will come outside the discussion. The thing for you, which will be technical for you, that is to identify data, to work with it. So this, you can get this ability by practicing more questions. Practice it more. Otherwise, whatever doubt you will send even or discuss with me, I will solve with the same formulas. Same thing I will use. I will not do anything new to solve the question. Every question will be solved in this discussion. Understood? So here you learned in this question one new thing. What is new thing? If total overheads are given and I want to calculate variables, I will deduct fixed overhead. If total overheads are given and I want to calculate fixed, I will deduct variable overhead. I will reach to my required part, right? Right or wrong? Right? Then now here we have which overheads? Fixed overheads. Can you just recall, can you just repeat with me one time only? If variable overheads are absorbed based on hours, based on what? Hours. How many lines were there? 3. With 3 lines, actual hours, into actual rate, actual hours into standard rate, standard hours into standard rate. First two line is which variance? Rate, price, or spending. This two is efficiency. If I will net off these two, this is called total variable overhead variance. If I take the difference of first line and last line, this will also give me what? Total variance. Then I told you if overheads are based on output, how many lines were there? Two. Actual output into what? Actual rate per unit. And then what? Actual output into what? Standard rate per unit. This will be the total variable overhead variance in case of output. And efficiency variance will not arise because efficiency variance will arise only due to labor or machines. So which we have tackled in the first scenario. Right or wrong? And then other thing I told you how to find actual hours. How to find? Again, this is actual same hours. Standard hours. How to find what? Actual rate. How to find? Standard rate. That's it. These 5 lines you cannot memorize. And along with 2-3 formulas. This is total variable overhead variance. Now for fixed overhead variance. Because you have to just, here he will ask, give you problems, you have to solve problems. For fixed overhead variance, please. Again, we have a same discussion here. I already told you now I'm dealing with which overheads? Fixed overhead. Okay, for fixed overhead, please remember here. I will tell you only the required information which will help you to solve questions. Always, just remember here, be strict with the formulas. Always you will calculate 3 overheads, fixed overheads, 3 lines for fixed overhead. Which 3 lines? You always need what? Actual overheads. I'm talking about which overheads? Fixed overhead. You need actual fixed overhead. Second thing you should know how to calculate what? Budgeted fixed overhead. And third thing you should calculate how to calculate what? Applied fixed overhead. What is, just remember the word so far. 3 overheads you need to know how to calculate it. How to find actual fixed overhead. How to find? Because now I'm just into that point, like I'm just trying to do spoon feeding for you guys. Just at least you should remember these things so it can help you to solve your questions. So 3 lines you have to find. Which 3 lines? Read one with me one time. Actual overheads, budgeted overheads, and applied overheads. Right or wrong? 3 lines. Actual overheads, budgeted overheads, applied overhead. First, let's understand how to calculate these 3 lines based on hours and based on output. Based on hours and based on output. Same 2 scenarios I will discuss. Based on hours, labor hours and machine hours, are based on what? Output. And then we will see which variance it will give you. Ready? So first of all, please remember, first scenario I'm explaining here, if fixed overheads are absorbed based on what? Hours. Hours could be labor or machine hours. Right? And how many lines you have to produce? 3. Don't break the sequence. First one, what? Actual overhead. Second line should be what? Budgeted. Third should be what? Applied overhead. Actual, budgeted, applied. And what is the case based on what? Hours. Overheads are absorbed based on hours. So let's do first. Let's understand how to find actual overheads, budgeted overheads, and applied overheads. Later on, we'll see what is the variance. So far, forget about variance. Just see how to find these 3 values. So if you want to calculate actual overheads, which overheads? Actual. How would you calculate? So it's based on hours. You always need what? Read slowly. What it is? Total actual hours. Multiply by what? Actual rate per hour. Obviously, this rate should be for fixed overhead. Second line is what? If I want budgeted hours, budgeted overhead. What I need, read slowly. Total budgeted hours. And what is next? Multiply by budgeted rate per hour. Read the third line. How to calculate what? Applied overhead. That is called what? Total. Read slowly. Total standard hours. And multiply by what here? Budgeted rate per hour. I'm talking about fixed overhead here. What is the first line? Actual overhead. How would you find? Actual hours into actual rate per hour. How you will find budgeted out overheads? Budgeted hours into budgeted rate per hour. How you will find standard hours? Applied overhead, standard hours into budgeted rate per hour. You understood what's the difference? Didn't understand, huh? In actual overhead, everything you are using actual. Hours are actual, rate is actual. In budgeted overhead, everything you are using budgeted. Hours are budgeted, rate is budgeted. In applied overhead, you are using standard hours and you are multiplying with the budgeted rate. Look at the difference. What's the difference? Okay, I'm asking you. Actual hours multiplied by actual rate. What it is? Actual overhead. Okay, budgeted hours into budgeted rate. What it is? Budgeted overhead. Okay, standard hours into budgeted rate. Applied overhead. Now just you need to work how it is, how to find. Okay, I'm not explaining variance. I'm explaining how to find these three things. For example, if I want now actual hours, what I want? Actual hours. How I can calculate? I told you so many times. We will use what? Actual output multiply by actual hours per unit. So this will give you actual hours. Look at the budgeted hours. How you will find? I told you already also. We'll use budgeted output into what? Budgeted hours. This budgeted hours per unit in per unit terms. It could be given with the name of standard hours per unit also. It is same. Budgeted hours per unit are in per unit term, per unit. It could be budgeted hour or standard hour. It's the same thing. Then you have here how to get total standard hours. See, standard hours per unit is different. Total standards are different. So when you calculate total standard hours, how you will find? Look, what is the formula? You will take this formula we studied so many times. From material I started and today we are discussing fixed overhead. So what is the formula for to get total standard hours? Output I will take actual, but I'll use here what? Budgeted hours per unit. Budgeted hours means say what? Standards are per unit. In per unit terms, you can use the word budgeted, standard, same thing. Understood? Clear? Now look at here how you will find actual rate. For example, if actual rate of fixed overhead is not given, how you can find? How you can find this? You need total. What? Budgeted or actual? Budgeted or actual? Why actual? Because I'm calculating actual rate. I'll take total actual fixed overhead divided by total actual hours, labor or machine hours. I'll get actual rate. You all are accountant. If you are calculating actual rate, so every data should be actual. If we are calculating budgeted rate, every data should be budgeted. There is no rocket science to confuse it. So in second two line here, I need budgeted rate. How I can calculate budgeted rate? I'll just change these words. I take total budgeted fixed overhead divided by total budgeted hours. And I told you how you will find the budgeted hours here. If you're using actual hours in some formula, I told you how to find actual hours. Right or wrong? Clear? Okay. This, just remember one word. This rate. This rate. Can you tell me what could be alternative name for this rate, for budgeted rate? Standard rate. And it is the, you know, budgeted rate, standard rate, same thing. But here in fixed overhead, he can use these words as well. Budgeted rate he can use, standard rate for fixed overhead he can use. He can also use overhead applied rate. Which rate? Overhead applied rate. He can also use word overhead absorbed rate. Overhead absorbed rate or overhead absorption rate. Overhead absorption rate, overhead applied rate, budgeted rate, standard rate. All these things are same one. Four terminologies I said here. Which four? Can you repeat with me? Budgeted rate, standard rate, applied rate, absorption rate. All these are same thing. Understood? Okay, now guys, I told you here how to calculate actual overhead, budgeted overhead, applied overhead based on hours. Now I'm going to explain all again these three things, but based on output. Based on output. Second case, three things we will find again: actual overhead, budgeted overhead, and applied overhead, but based on output now. Just remember, and then I'll tell you what is the variance. So here we go. So case number 2. If overheads are absorbed based on units of output. First, I need which overheads? Actual. Second, I need budgeted. Third, I need applied. Don't break the sequence. Actual, budgeted, applied. A, B, A. First, A stand for actual. B stand for budgeted. Third, A stand for applied. A, B is the mnemonic, because you have to keep same sequence to find out the variance. If you change the sequence, you cannot find variance correctly. So now please need concentration. And at the end, I'll tell you only just 10 lines variance. This is the 10 lines. These are 10 lines for variable and fixed overhead. Okay, and that should be in your mind while solving questions. So here we go. How to find it? First of all, actual overheads. Actual overheads. How you will find, guys? Please, I need here what? Total actual. It's straight away units. Actual output. Actual output. Just write actual output here. Multiply by what? Actual rate per unit. You will tell me. You all are accountant. I want actual rate per unit. How I can find? I'll take total actual fixed overhead dollars divided by total actual output. This will give you actual rate per unit. Second line is what? Budgeted overheads. How I can find? I need budgeted units. Budgeted units. Budgeted units means a budgeted output. Straight away, just I need to look where is the budgeted output. I'll take that one. And I will multiply with budgeted rate per unit. Tell me budgeted rate, how you will calculate. There I have used the word actual. There I use the word budgeted now. Total budgeted overheads divided by total budgeted output. This will give you what? Budgeted rate. Third line is what? Applied rate. Look which units I'm using here. Actual units. It's a flexible amount actually. Actual output. But multiply by which rate? Budgeted rate. Same as I told you, budgeted rate. You will find this by applying this formula. And budgeted rate, I said earlier, budgeted rate can be given with the name of standard rate per unit. It can be given with the name of applied rate per unit. It can be given with the name of absorption rate per unit. It's same thing. Okay, got it? How to find actual overhead? Read it. Actual output into actual rate. How to find budgeted? Budgeted output into budgeted rate. How to find applied? Actual output into budgeted rate. And what's the alternative name for budgeted rate? Standard rate, applied rate, absorption rate. Understood? So I told you three values, three words. Budgeted overheads, actual overheads, budgeted overheads, and applied overheads. How to find these values based on hours, based on units. Right? 3 lines. Now I'm going to talk about variance. Understand something you have to memorize here. Please remember now. Whenever, there are total 3 lines. 3 lines which overheads? Actual overheads. I told you how to find out. Based on hours, based on output. Second line is what? Budgeted overheads. Based on hours, based on output. Third is what? Applied overhead. Based on hours, based on output. 3 lines you know how to find out. Please remember. Now I'm going to tell you something about variance. Whenever you compare these 2 things. Which 2 things? Actual overhead and budgeted overhead. Once you will take the difference of these two things, actual overhead and budgeted overhead. You know, this difference is variance. Which variance? It is called spending variance. It is called expenditure variance also. It is also known as budget variance. Maybe in question will ask you calculate budget variance. Don't confuse. Budget variance means say you have to take difference of actual overhead and budgeted overhead. That's it. Understood? Clear? Second thing, when you compare these two lines, which two lines can you check? Budgeted overheads and applied overhead. The difference of budgeted overhead and applied overhead is called which variance? Volume. So it means two variances are there. First variance is called expenditure, spending, budget variance. Second variance is called what? Volume. For volume, you can use the word quantity variance also. Volume variance. So how you will get spending variance, guys? Spending variance, how you will get? Difference of actual and budgeted. Now you will get volume variance, difference of budgeted and applied. You should keep same sequence. First actual, then budgeted, then applied overhead. Okay, now please. Two more things you have to remember because concepts are hard to understand. For that, you need to know costing method in depth, especially variable and absorption costing. Because our objective is to solve a question. In exam, we will use two statements. He may use two statements. First, he would tell you that company is using variable costing. Company is using. And second statement he can use. Company is using absorption costing. If company is using variable costing, only one variance will be calculated. That is going to be what? Spending variance. If company is using which costing? Variable costing. Variable costing is also called marginal costing. They are using marginal costing, variable costing, then you will calculate, and he's asking, calculate fixed overhead variance. You will calculate only one variance, which is spending. And spending variance, how you will calculate the difference of actual overhead and budgeted overheads. But if he is telling you in question that company is applying absorption cost, which costing? Absorption. Then you will calculate two variants. You will in absorption costing how many variants? Two. You will calculate spending variance and you will also calculate volume variance. Can I ask question? If company is applying absorption costing, how many variants you have to calculate? Two. Spending and volume. If company is using variable costing, only first variance, spending variance will be calculated. Don't calculate second one. Clear? Because applied overhead actually it is arising only in absorption costing. It's not there in variable costing. Understood? I'm asking question other way around. Company is applying variable costing. Tell me how many overheads we will calculate. 2 or 3? 2. Which 2? Company is applying variable. We will calculate only actual overhead and budgeted and we'll take the variance. That's it. But if company is applying, I'm just saying same thing in other words. If company is applying absorption costing, how many overheads you need to calculate? 3. If they are applying absorption costing. Actual overheads, budgeted overheads, applied, and 2 variance will arise. Clear? Now, okay, please remember. Can I ask another question? Just, it is in front of you. Try to use your mind what I'm saying. I'm saying company is applying which costing? Variable costing. And I want you to calculate total fixed overhead variance. What? Total. Use your mind now. Company is applying variable costing. And I want you to calculate total fixed overhead variance. Total variance for fixed overhead. So this spending variance will become your total answer. Because only one variance is there. This is going to be total. Understood? Now I'm saying another question. If company is using absorption costing, which costing? Absorption costing. And I want you to calculate total variance. How you will calculate total variance? First you will calculate spending variance. Then you will calculate volume variance. Then these two variance you will do plus minus. So this is going to give you what? Total variance. And total variance I can calculate by using another way also. If I take the difference of actual overhead and what the third line, which is applied overhead, this will also give you total variance. Can I say one more time? Company is using absorption costing and I want you to calculate total variance. So now you got two ways. First way, get spending variance, then get volume variance, then net of spending and volume get total. Second way is get what? Shortcut way. Take the difference of actual overhead, first line, and the last line. This will also give you total variance. And one more word you should add in your dictionary. Total variance is also called amount of under applied or over applied. This is I'm explaining on absorption costing now. In absorption costing, how many variance are required? Two. Spending and volume. If I do plus minus net of spending and volume, what I will get? Total variance. And this total variance is called what? Amount of under applied or over applied. When you not saying what is under applied, what is over applied. Just remember so far because under applied, over applied, we'll study in absorption costing what it is. Okay, just because we are studying variance, I'm explaining that part only. So here we go. How, if I'm asking you guys, if I am asking you now, please remember. If I'm asking you to calculate under applied amount, which amount? Under or over applied amount. Actually, what I'm asking you? What I'm asking you? I'm asking you to find which variance? Total variance. Total fixed overhead. Total fixed overhead variance, how you will get? What was the first way? Take spending variance plus minus volume variance. This will give you total variance. And what was the second way I told you? The difference of first line, which is actual overhead, and the last line, what? Applied overhead. This will also give you total same answer. So if he is asking to calculate under and over applied, I will go for the second shortcut. Why I will calculate spending first, then volume, then net of? Why I'm increasing my volume? If he is asking, his objective is to test only under and over applied, I can directly calculate which overheads? Actual, first line, and applied, third line. Take the difference and I will tell you it is over applied or under applied. Understood? So how you will get it? Look at here. When you would say it is over applied and when you will say it is under applied. Here I'm telling you it. I'm talking about now under or over absorption of overheads. Ready? Shortcut I'm using. Total variance shortcut. What is shortcut? The difference of, I'll take actual overhead and the difference of applied overhead. This will give you what? Variance. Total variance, right? If same rule, if first line is higher, second is lower, this variance is going to be unfavorable like all other costing rules. If first line is lower, second is higher, the variance is going to be okay. Now please remember, the unfavorable starts with what? U. U stand for unfavorable and U stand for what? Under applied answer. This is just I'm telling you where to memorize. U stand for unfavorable and U, if it is unfavorable, you would say it is which applied? Under applied. If it is favorable, you would say it is over applied. Unfavorable variance is under applied or over applied? Under applied. And obviously then favorable will be over applied. I know I didn't tell you concept. And because I cannot explain it here. If I will explain it here, so you should know that in-depth knowledge of absorption costing, how to get under over applied there. So that is useless if even I will explain it. It just you need to know it is under or it is over. How to get spending variance, how to get volume variance, that's it. Clear? Understood? Sorry? Screen? I'm not sure, madam. Somewhere in the setting, I don't know. Okay, next time I'll take. So now guys, please, this is clear now. How many overheads we need for fixed overhead? 3. Which 3? Actual, budgeted, applied. The difference of actual and budgeted it is spending. Difference of budgeted and applied is volume. The difference of spending and volume is total. The difference of actual and applied is first and third line is total also. If total variance is unfavorable, it is under applied. If it is favorable, it is over. Understood? Now I'm showing you one question here. I have one more question. In variable costing, how many variance is required for fixed overhead? Under variable costing. 1. Which variance? Spending. If you are using absorption costing. 2. Spending and volume. Under and over applied variance will arise only under absorption costing. Understood? Now here we have a question. This question is also a little bit tricky, but you have to work because it has some reverse calculation. Can you go through this question, please? As I told you guys, always read first requirements. You have to calculate if you look at the requirement. So the question is that you have to calculate fixed overhead during May was under applied, over applied. It means you have to calculate total variance. And I'll prefer to do in shortcut way. What was shortcut way? I need first line. What was the first line? I need actual overheads. And third line, I need what? Applied overhead. Actual and applied. So this is what I need. And let me see data is given in hours or in units. So here we go. Let's read the question now. So a manufacturer uses a standard cost system with overhead applied based on what? Direct labor hours. I'll use now hours cases. The manufacturer budget for the production of 5,000 units. So this is what? Budgeted output. Budgeted output. Then for the month of May and include the following information. Actually, this information is for 5,000 units. So for 5,000 units, they need this much labor. Labor, they need how many hours? 10,000 hours at the rate of 15, so it is 150,000. They need this much overhead. They need this much fixed overhead for 5,000 units. This is budgeted information. Then it told you during May, 6,000 units were produced. This is what? Actual what? Output. Then, and fixed overhead budget variance. You remember what is budget variance? Spending variance. I told you spending variance is also called expenditure variance here. It is also called budget variance. So variance he told you, budget variance. He told you how much? 2,000 favorable. Then fixed overhead during May was. Okay. We have to calculate under applied or over applied. So first I'll write what I need for under applied and over applied. So first I need what? Actual fixed overhead. Then I need what? Applied fixed overhead. First I need to work for actual. So it is the hours case because overheads are based on what? Hours. Now let me try first actual overhead how you can find. By the way, you cannot find here actual labor hours you need. Because what I'm calculating, focus with me. I want to calculate what? Actual overhead amount, right? How it can be calculated? I need actual labor hours total. Multiply by actual rate per labor hour. Right or wrong? Okay, can you just see, look in the question, is there any actual rate per hour is given? Look, actual rate per labor hour is given. Look in the question. I'm asking you. Huh? Is it actual? It is budget. This 15 is budgeted because he told you for 5,000 units, this is the data. And 5,000 units are budgeted units. There is no actual rate. So actual rate is not available. So it means I cannot calculate actual overhead by using this formula. Right? But he told you in the question, budget variance. You know, budget variance, how you find? Budget variance is always, means say spending variance, expenditure variance. It's also difference of actual overhead cost and what? Budgeted overhead cost. And I'm talking about fixed overhead. Tell me guys, and budget variance is given. Variance is how much is given? 2000. 2000 favorable. It means first line should be lower, second should be higher, then it is favorable. If first is higher, it is unfavorable, I told you, in all cost scenarios. Now tell me, budgeted overheads, fixed overheads are given or not? Look in the question. Budgeted fixed overhead, tell me where it is given. Budgeted overhead, this value is given or not? Look where. Here. 80,000 is given. Can I find now actual overhead? Because answer is given. 3 things are there in total. 2 things are given. Third thing I can calculate. What is the amount of actual overhead? Tell me here. 70. Because first line should be lower, second is higher, then variance should be 2000 favorable. If second line is 80,000, it means first line should be what? 78,000, or simply the difference of these two values should be the first line. I got actual overhead. How much actual overhead I got? Because this way I cannot find actual overhead, so but this way I found it. So I wrote it 78,000. So first line I got it. Actual overhead I got it. Now I need to work what? Applied, and rate is, we have to use here. No, for applied overhead, my point is you have to use labor hours case. It's not output case. Can you tell me applied rate? What was the formula for applied rate? For applied rate based on hours. You don't remember, huh? Applied rate based on hours. What was the formula? Applied overhead if I want. And case is hours based on hours. So what was the formula? I need what? Total standard hours, right? Right or wrong? I need total standard hours into budgeted rate per hour. Budgeted rate is given. Let's try. First, total standard hours, I told you how you will find. You will take actual output. Output into what? Standard hours per unit. This is how you will get total standard hours, right? Look from the question first. Look from the question first. Where is the actual output? Output. Search from the question. 6,000 units. Actual output is given 6,000 units. I'll take 6,000 units into standard hours per unit. Now it is your standard hours, budgeted hours per unit. See how much from the question. Straight away, it's not given, you have to work standard hours. Can I tell you how you will work? Tell me for 5,000 budgeted units, how many hours are required? I can convert, right? Per unit hour. Tell me per unit hour will be how much? 2. How? Because 10,000 hours was total. Divide budgeted hours 10,000 and budgeted units are 5,000. So per unit hours will be what? 2. Right or wrong? I got a standard hours which is 2. So 6,000 times 2, it is going to be what? Total standard hours? 12,000 hours. Now I need what? I need budgeted rate per hour. This rate I want for what? Fixed overhead. So I'm taking back to the question again. Fixed overhead rate per hour I want. Budgeted, I want what? Budgeted fixed overhead rate per hour. How I will calculate rate per hour? I need total budgeted fixed overhead divided by total budgeted hours. So total budgeted fixed overhead is how much? 80,000. And budgeted hours are how much? 10,000 is given. Given or not given? So budgeted rate per hour will be how much? $80,000 divided by 10,000 hours. It will be what? $8 per hour, right? So this is which rate? Budgeted rates. I'll bring it here. I'll bring it here. So 12,000 hours I already told you how to find. And 8 is what is the rate. So second line is completed now. Second line is also completed. Right or wrong? Actual overhead was how much? 78,000. And total standard hours were how much? 12,000. And standard rate is how much? $8. So second line answer I also got. Now first line is higher or lower? First is lower, second is higher. This variance is going to be favorable. Unfavorable, you stand for unfavorable, you stand for underapplied. But if it is favorable, so it should be what? Overapplied by how much? 18,000. So which is the answer here? What is your answer now? Go to the question. 18,000 favorable is your answer. Overapplied by 18,000. Right? This is your answer. Understood? Okay, now last point I'm going to explain. This is what is analysis of overhead variance. Actually, guys, listen to what I'm saying, please. It is all about reporting now. Like when you calculate the variance, obviously, and you will report it. You will report to the management how much is the variance. Can you just tell me for variable overhead, we calculated two variance. Can you name those two variance? One, it was spending, which is also called rate, which is also called what? Price variance. I am using what is spending variance, okay? And second variance was what? It was efficiency. So it is same written here. For variable overhead, we have a two variance. Which one? Spending and what? Efficiency. Right? Just assume. And for fixed overhead, we have a two variance. Which two? Again, spending and what? Volume. So it's written here. In front of fixed overhead, it's written down to the spending, and then it's written under what? Volume. So total how many variants we have? 4. Now please remember what I'm explaining now. It's just how you would report the variance to the management. So there are total 3 approaches are there. The first approach is called 4-way overhead variance analysis. 4-way. Second approach is called what? 3-way. Third approach is called 2-way. What does mean by 4-way? Means a 4 variance you have to report. 3-way means a 3 variance you have to report. 2-way means a 2 variance you have to report. Now ready how to report? Let me explain. Don't worry. These all values are assumed. These values are assumed only for the sake of understanding. For example, for variable, if I'm using how many ways? 4 ways. 4 way mean to say 4 variance I have to report. What I'll do? For variable overhead, I will report 2 variance. Which 2 variance? Spending and efficiency. And for fixed overhead, I will also report 2 variance. Which one? Spending and volume. So if I will report 4 variance, this is called 4-way reporting. Then we have a 3-way. 3-way means a 3 variance. 1, 2, 3. So what will be the first? Please remember here. I'll merge these 2 variants. Which 2 variants I merged? Spending. Spending of what? Spending of variable overhead and spending of fixed. I will merge as one. I will net off, plus minus these 2 variants. And I will show you one variance as which variance? Spending variance. Second variance I will report same efficiency variance. And third variance I will report same for volume. So what I have done in the 3 ways, I have plugged spending variance of variable overhead and spending variance of fixed overhead. I have plugged and I showed one value. Then I show one value for efficiency variance and one value for volume variance. If I show these three this way, this is called what? Three ways. Now there are two ways. Two ways means two variance. So in two ways, you know what you will do? Please remember. In two ways, I'll plug these three variance. I'll plug, and I'll show one value. Can you see which three values I'm going to plug? I'm going to plug spending of variable plus spending of fixed plus efficiency of variable overhead. If I will plug these three values plus minus, I'll get one value, and now this value is known as what? Flexible budget variance for overheads. Flexible budget variance for total overheads. And then I'll show you one value, what? As volume variance here. So if I report these two variances, so this is called what? Two-way variance. Can I ask question? In two-way variance, how many variants you will report? Two. What is the name of first variance? Flexible budget. How you would get it? By taking spending of variable overhead, by taking spending of fixed overhead, by taking efficiency of variable overhead. So you will get what? One flexible budget variance. And what is going to be second variance? Volume. Okay, in three ways variance, how many variants you will report? Three. Which three? Spending, efficiency, and volume. And tell me in spending, how many variants will be there? Two. In this spending, there will be spending of variable overhead and spending of fixed overhead. Right? Understood? So that is it. This was for today class. We discussed what? Overhead variance, variable overhead and fixed overhead. Okay, two cases I taught you. Can I ask question? I'm talking about variable overhead. Take back first 50 minutes. Variable overheads. And variable overheads are applied based on output. Variable overheads are applied based on output. Variable overhead. How many lines you will produce? Two or three? Two. Right? Yes. And in that scenario, efficiency variance will not arise. Again, if variable overheads are applied based on hours, how many lines you can produce? Three. Right or wrong? For fixed overhead variance, how many lines we need? Three. Which three? Actual overhead, budgeted, applied. First two line difference is called what? Spending. Next two line difference is called volume. Do we calculate volume variance under variable costing? No. Only spending variance we calculate. Spending variance is the difference of actual overhead and budgeted overhead. And how you will get under and over applied? Directly. Under over applied. Actual overhead and applied overhead. Difference of these two. Okay? This is how it should be in your mind while tackling the question. Okay, guys? Thank you so much, guys.